Hello everyone, welcome to Just Invest Today. And today we're talking about Cathie Woods. Is Cathie Woods creating a bubble in the market? And she went out to say that other companies, other ETFs are in bubble territory, but her investments are not, basically, is what she's saying, because innovation is the next big thing. So let's get into what Cathie is. So Cathie is a founder and fund manager of ARK Investment Management. She has decades of experience, plus she's actually a portfolio manager. She focuses on publicly traded companies about innovation, and that's everything what she's about. She's about innovation and finding these amazing companies that are going to change, because that's going to create the wealth and generation in the economy. So that's what she does, right? So that's perfectly fine, right? So let's get into what she has in her portfolio. But even with that, you can see that she has a lot of these good stocks in her portfolio. This video is going to be all about price discovery. Is price discovery important? Because what she's doing is just buying these stocks, and I feel like she does no price discovery. She does no fundamental analysis. She just buys what has a momentum going and what looks popular, what people are thinking about. That's what I see with Cathie Woods. So is this a good strategy in today's market? Probably is right now, right? So you can see what companies she has owned right now, her top 10. Her top 10 companies: Tesla, Square, Roku, Baidu, Teladoc, like all of these companies, we can just go down the list. So these are all very popular stocks that you can tell they're very based on momentum. Momentum basically meaning is that there's there's good footing in the market about around these stocks, meaning people are gonna pay higher and higher and higher in prices, driving the stock higher and higher and higher, right? And they're not saying, okay, this stock is overvalued or it's way overvalued. Let me sell this stock because it's too overvalued, or they get in at a good price and then they sell it late, and then they sell it when they think it's overvalued. I don't think Cathie is doing this at all. She's just riding the wave. And how long can that last, guys? Is that the new thing? Can, like, what's gonna happen when the bubble pops? Because we know right now we're in the, if we're thinking baseball, we're in the ninth inning in this. We're at the very end. There's no telling when it's gonna happen, but we're at the very end. Her strategy has been working amazing, because everyone knows technology stocks have been doing amazing. Like, how can you do bad in this environment? Especially when you're investing in just technology stocks, you're not gonna do bad. Like, the past decade, like the stock market has just been going up. So she looks like a genius right now. But what happens when there's a bear market? Is she gonna be doing the same things she's doing now? Is her portfolio gonna be still be amazing? Because that's what I want to know, because the bear market, the bubble will pop sooner or later, and there's no doubt about it that we're in the ninth inning in this whole field. So, how is her portfolio, how is ARK investment going to fare in that type of environment? So, look, she's been making 36% since inception. This is like 5, 6 years ago. So, you can see how strong her gains have been. Like, 36% is amazing. And I gotta give it up to her for that. 36%, that's very dominant. But again, in this space, like, who's not making a lot of money? Especially if you're just investing in technology stocks, 36% actually seems really reasonable, to be honest, in a 5 to 6 year span. But how is she gonna fare in the bear market when it's gonna come? Like, this, it's inevitable. Like, the market goes through its ups and downs. It's an auction driven market. It has to come down eventually. It can't. The stock market just does not go up, right? So that's what you got to keep in mind when it comes to Cathie Woods. And is she creating the bubble? Because I'm going to go back to Michael Burry and what he said. So Michael Burry says price discovery is important for these index funds, for these ETFs. Like, the ETFs, the index funds, are not using price discovery. They're just whatever. They just have it in the index, and then people can just invest in it, and people are not doing analysis. So this is creating a bubble. So But the thing is, what Cathie is she's an active investor. But it doesn't matter because is she doing price discovery? That's the key thing with what Michael Burry's whole premise is that people are not doing price discovery, so they're creating a bubble by just investing in stocks that are very overvalued, creating this momentum, which sooner or later has to go back down to what it's really worth in the economy. Like it has to follow what it's really generating and what the money, what people are really paying for these stocks and the prices of this company. So let's get into that. Let's see what Michael Burry has said about this in the past, which is very key for what we're talking about. So in this article, Bloomberg, he said it will be ugly. Whenever that huge crash comes, it will be ugly because a lot of people, especially Cathie Wood, she has like 41 billion under management, and she has like a number of ETFs. She has like an innovation, she has like an internet one, she has a fintech, so she has different kind of ETFs, right? So the key thing is she doing price discovery? So let's see what Michael Burry said. So index funds and price discovery. Central banks, Basel, have more or less removed price discovery from the credit markets, meaning risk does not have an accurate pricing mechanism in interest rates anymore. And now passive investing has removed price discovery from equity markets. The simple thesis and the models that get people into these factors, indices, ETFs, and mutual funds mimicking those strategies. These do not require security level analysis that is required for true price discovery. And this is what I'm talking about. Like, is she doing the good thing for the long term? This is not about now. We already established she already generated 36%. But over the long term, is this going to be successful? Do you see her continuing 36%? Do you see her dropping down to, even if she can get to 15%, it'd be amazing. But she's right now creating a bubble in her ETF. And we're gonna see that right now because look what happened. Look what happened. A record amount of outflows out of her ETF. And this was only like a 4% drop, and people were running for the hills, removing so much money from her ETF with a 4% drop only. Are you telling me that's not going to create a crash when the real 20, 30, 40% drop happens? And if you think about it, before people didn't really like Cathie Wood is just coming to the forefront of people's eyes, I feel like right now. So people are investing so much more money into her funds now than way before, which it's understandable because she's doing so well. But that's creating that little bubble because a 2 day drop in the stock market created a record amount of outflows out of her fund. And then when you go back to it, the ETF, her own ETF, roars back into fashion just like that. A record number in inflows. See how that's whiplashing that market? It's creating that seesaw effect, which is going to have tremendous impact on the market when the market does crash. And we're going to see how her ETF holds up, all these ETFs. So let's go to a video of what she talks about too, about all the price discovery, innovation, uh, the bubble that's happening in the market. So let's go from the beginning. This is very interesting. Very interesting.
I'm very happy to be here at Exponential Finance. While my slides are
This was in
loading,
2019.
I will actually maybe cause a little bit of a stir. Loved Amin's presentation. Great setup for what we do. However, here's where I would disagree with his point of view. We believe that, yes, we're in a deflationary world because of all of the innovation that's evolving at the same time today. There are 5 platforms evolving. They're all deflationary. And we believe that the public equity markets may be overvalued if you're talking about the indexes, but the most undervalued part of any equity market, and I mean private or public, is innovation in the public markets. Now, consider...
Did you hear that? She says innovation is undervalued right now. Really? Like, That she said that, right? So if we just go to her like her like top three holdings, she's saying we know Tesla is an amazing company. Guys, the PE ratio is at 1,000. She's saying we know Tesla is the main front of innovation. We understand that. Basically, is what she's saying is price doesn't matter when it comes to innovation. That's what she's basically saying. Look, look where she says innovation is still undervalued. Tesla's at 1,000 PE. You know how expensive that is? If you invested $1 in Tesla, it'll take you 1,000 years to get that back. If it had no more growth, like think about that for a second. She just invested in Zoom with a 259 PE. She just invested in Zoom. Look, Zoom Video. She bought Zoom Video. 255,000 shares. Guys, look at that. She's saying innovation is undervalued. Zoom is at a 259 PE. like Square is going crazy. Her another top stock, 570 PE. She's saying these innovation is very undervalued. Do you agree with that, guys? I want to hear what you guys have to say about this. Do you think innovation is undervalued right now? So let's go back into this video.
The source, it's what I do, innovation in the public markets. The other disagreement, however, would be on the yield curve.
So let's go to, I want to, and then we're going to go to the very ending of this video. So she says innovation is undervalued. Just take that in, process that, and see what you think. Is innovation undervalued right now in the market?
The world reverts to the reserve currency. The reserve currency of the crypto asset ecosystem, we believe, is Bitcoin. And there will be a few more currencies, just like there are the yuan, the euro, the yen. So we do believe, and we're looking for those. But we also believe that most of the 2,000 crypto assets in the world today will be pretty worthless, because the velocity, it's back to velocity, an economic concept here. The velocity of many of them is going to be enormous, because those who are working in the crypto asset ecosystem are always going to default to the reserve currency, and we do think that will be Bitcoin. So with that, I think I might have time for a question or so, if we can allow that here. Any questions?
So that's good to like
if
know
this is
that
a Q&A
Bitcoin
forum or
has a
not.
strong possibility of being the reserve, being actually reserve currency
Anyway,
of Bitcoin.
thank you. We're really excited about the future. We think the biggest undervaluation out there is in the public markets, innovation specifically,
See?
because what has happened since the tech and telecom crash and the 08-09 meltdown, there's been a shift to what investors perceive as safety. So there's been a lot of indexing and passive investing. Guess what?
See, indexing and passive investing. She just thinks because she's an active investor, everything is okay. Like, she just thinks that everything's okay just because she's an active investor. When we know that active investors that are really active, they're in and out of stocks, they usually fare worse than actually the passive S&P, the person who just leaves their stocks into a few companies and actually have those huge returns and don't move around often, because that creates a lot of problems too when you're just moving around a lot.
They are in harm's way because those indexes are filling up with value traps. Value investors know this. They know their biggest risk is a value trap caused by innovation. Growth investors don't understand this yet.
You see what she's saying? She said everything, the passive investors, everything in like basically, she's talking about basically the S&P, the passive investment, the index funds. They have value traps because innovation is going to take over basically all those companies. And when she's talking about a value trap, she's talking about people buying undervalued companies with like maybe a low PE or a low price to cash flow, free cash flow, and they think just because it's a low PE, it's gonna generate high returns, right? It's gonna come zooming back and get a higher PE, generate those returns. But it's a value trap because that company doesn't grow, right? So that's what she's saying. She's saying these companies are value traps because they're not going to grow because all the innovation is going to take over those companies, right? So that's what she's saying and that's what she's thinking. But my question to you guys is, she has all these companies, guys. Look at this. She has all these companies, right? Look at this. Look at this. All these companies. What's better, the value trap of what she's saying, or her not knowing what company is gonna do what, and if she's paying too high of a price? And what I mean by that is, what company is gonna succeed in the market? Like, what company is gonna over succeed, and what company is not gonna succeed in the market? Does she know that? She's just betting. She's just betting on all of these, but she has no idea which ones could succeed because she's not doing any price discovery. She's not really doing any like evaluation of the company and going in depth of what how it's innovating. Is it going to be successful for the long term? And that's the very key thing, long term. Not the now. She's generated her 36%. Amazing, Cathie, but long term. And that's what people are looking for, some long term success. Not overnight. 5 years is not enough because we know this market has been booming. Everyone who invested in a lot of technology stocks have done amazing in this market. So that's not too crazy. But what happens when the bear market happens? Can she still succeed in that type of environment? That's what I really want to know. And that's going to be the good answer going into the future. Is these companies going to be the actual value trap because you're paying too high of a price? So when it comes back down, when the bubble pops, how long is it going to take for that company to recover and get back to that growth phase or past that growth phase? Because these PE ratios are way above the average. And we've seen with Microsoft, it took 10 years from when it was at its peak to get back to its peak. 10 years later, it took 10 years to get back to its peak after the 1999 crash. So think about that for a second. And so, what's the real value trap? Is it the innovation and paying high prices for these companies, or paying these undervalued stocks right now into the market? So that was a lot, guys. Tell me what you think about this video. If you like it, please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!